Hello guys, hello. Welcome yet again, welcome yet again. So right now I want to talk about something. Okay, I want to talk, I want to talk about something that I've actually you've been hearing the words, I've been sharing with you some words about market structure. What is market structure actually? What is market structure? So just need to share with you my screen and show you some structure or what is market structure. So just go ahead, just go ahead and talk about market structure. What is market structure? Market structure is like what you're seeing right now. Today I will only use one pair. This one I've already shared with you on what we're anticipating this coming week. So let me just go ahead and delete all this information that I've just shared with you a few minutes ago. I will not get tired till you guys grasp the concept. I will not get tired. It is not in my to get tired. I don't like getting tired. It is not in me to get tired. I am not getting tired. I will not. I am not. I'm not getting tired. So, what do we mean by market structure? Market structure is like what you're seeing here. The market is operating on higher highs and lower highs and higher lows and lower lows and all that. So once you see the market moving in a certain way or in a certain trend, that is what we call market structure. Okay, that is market structure. That is actually market structure. So what is break of structure? Okay, we have now known that market structure is when the market is moving or behaving in the same constant way that it has been doing in the past. So what is break of structure? Like market structure, you can when the market has structure is what we call market structure, because the market you can see higher points, lower points, higher points, reversal points. You can see market reversing here, the market reversed here, the market reversed here, the market reached this particular low, reached this particular high. So we are having higher lows, trend of higher lows, having trends of lower lows. So the market has structure. But a market that doesn't have structure is moving in either. Let me give you an indication of a market that is not actually moving in structure. Actually, a friend of mine was investing in crypto and he pulled out this particular, how do you call it? So it is not that. It is bit bars or what? Bars. Yes, this particular pair right here. Yes, thank you so much. So I've just shown you what structure is all about, but you can see another market here. Eh? Can you see any structure here? Do you even see the market having higher highs and lower highs? The market behaves like this. Do you even have structure here? How can you even invest in a market like this that you can't even identify the support and resistance levels? You can't even identify the higher points and the lower points. This is the market that we call a choppy market. Okay, this is a choppy market. It will chop you off your money. It will take away your money. It is called a choppy market. This is not a structural market, but this is a choppy market. A market that doesn't have structure. A market that doesn't have higher highs and higher lows. You don't know even where the direction of the market is going. You can just see some waves operating like radio waves. Actually, even radio waves have structure. Okay, radio waves have lower and have lower lows and lower highs. If you see, if you go to the delivery route, you will see that those particular waves moving on those particular screen when the baby is yet to be born. Okay, you can see structure uh, on those particular screens, because forex traders see trading opportunities everywhere. Even if you watch the clouds, also you will see some structure operating on those particular clouds. If you see, you actually see like a forest of trees, a forest of trees, not a forest of cactus trees, a forest of let's say what do you call it? A rainforest like structure. You'll see the higher highs and the lower lows. So, but on this particular market, you can't even see any lower lows and lower highs. So this is a choppy market, doesn't have structure. But let us go back. Let us go back. Let's go back. Let's go back. Let's go back. Which way are we looking at? It was called your. Actually, I have it. So yeah, let me come here. Here we can see structure. You can see the market is going on an uptrend. That is a good structure. The market has highest points, lowest points. So this is a good market. So for you to invest in any crypto market or in any market, so you need to have a market that has structure. Okay, like Bitcoin has structure. That one I can show you. If you're talking about structure, because today you're talking about structure, if you are looking for a place to invest, Bitcoin has structure. You can see higher highs, you can see highest point, lowest point, you can see the market moving in lower lows, okay, lower, low, low, these are lower lows, higher lows, you can see higher lows, then you can see the market trending up from higher highs, forming higher highs and also forming lower highs. So Bitcoin has structure. That's why that's why today I just want to talk about structure and also talk about break of structure. So we have known that structure is when the market has higher highs and also it has some lower lows and also it is moving in what we call ranging. The market is moving in sideways. That is a ranging market. It is moving in sideways, but it's also a structure. So a sideways market is like which one? Let me find a sideways market right here. Let me try and find a sideways market. Where will I get a cyber market? Like this one here, you can see, yeah? You can see, right? This market is moving sideways. Instead of forming higher highs as it goes up, it went down, it moved in sideways, okay? This particular direction, it moved in sideways, on a, moving from the left side to the right side, it is moving in sideways. So this market has structure even though it is moving sideways. So that other market is a choppy market. You only chop off your money in is making a buy, the next time is making a sell, the next time is making a buy, the next time is making a sell. Those are not good markets to enter. Those are not good markets to enter. Stay away from choppy markets. Stay away from markets without structure. Stay away from choppy markets. Stay away from market without structure. So what do I mean by break of structure? So I've just shown you structure. Now I need to show you break of structure. What do we mean by break of structure? Break of structure. Let me go to my line chart. I use my line charts. Do some do some calculations. Okay. So let's say you saw a market that was trending up like this. The market was trending up, right? The market was trending up. That one has taken a lot of information. Let me just look that and put it little lower one. It's like a trend line right here. Okay, a trend line right there. So the market was moving up, making series of lower highs and series of higher lows. Okay, sorry, series of lower highs, okay, and series of higher highs, okay, and series of higher highs. So the market was moving up. Then we come to this particular area. This is structure. The market is obeying structure, but now the market wants to break the structure. Okay, the market wants to break this particular structure. This is a structure. The market wants to break this particular structure. How will the market break the structure? If we are moving up and we need to change the momentum of the change in position of the market, once we were buying, now we want to go into the sellers market, or we now want to look for sales, we will see a very big candle breaking out, a very bigger candle breaking out, or a very bigger pressure happening where the market will break out with a very big candle. The market will break out with a very big candle. So once you see a market break out with a very big candle, okay, once you see the market break out with a very big candle, then we mean that the market has broken structure. Wait for that bigger candle to close to the downside, then take the market where? I didn't hear you. Where? Down. Okay. The market has just broken structure, so we are waiting for the market now change position and trade where? Down. Market trade down. So you can see a very big break of structure right here by the market breaking with bigger candle. The market has just broken with a bigger candle. The market has just broken with bigger candle. The market has just broken with a bigger candle. So that is break of structure. Okay, let me take you to another break of structure right here. Another break of structure. Okay, this is what we call a pullback. So to call a pullback on an uptrend. The market was trending up, at this pullback, then the market continues going where it was going. So the market continue. That is a pullback. The market continues going to where it is going. So the market was operating on this particular level. Then the market wanted to go up. What did it do? It broke out of that particular structure with a bigger candle, a bigger green candle. We had a retest, then the market went where? Up. Then the market went where? Up. Then the market went where? Up. The market went up. So that is a break of structure. One. I see that break of structure. Then let me now put in what we call support and resistance. Let me say you are in this market at this particular area. Sorry. In this market at this particular area right here. Right? That particular market, that particular area right there. That particular market at that particular level. We had a bounce here, the market went down. Okay, we had a bounce here, the market went down. The market came, we had a break of structure by a bigger candle. We broke the structure. We wait for the next candle, but it could not actually retain the. This is where sometimes you have fake out. Even though we are having break of structure, you have to wait for some few days for the what? For the continuation of what the market has just broken. The market in the previous time, it couldn't break, but we had a break of structure right here. Then the confirmation happened where? Right here. Okay, the market traded down. It came, then we had now a bigger break of structure. Do you see how that candle broke and closed up? You see this one, how it closed up? It closed up with a very smaller ratio, but this candle, do you see how this candle closed up with a very bigger body? So that is a good break of structure, whereby these ones will happen and fake you out if you are that aggressive trader. Once you saw this, you entered, you thought that the market will retain itself up here. Put your stop loss right here. It's good for you because your stop loss will not reach. So you made some profit. But if you could have put your stop loss, actually this is where the market turns. So this is a good area of stop loss. So you are not stopped out. Made some profit. Actually made some profit because the market broke away with a very, very, very bigger candle. Then boom, you made your money. Boom, you made your money. So let's say you are on this particular market. Once it did this retest, you saw this, it couldn't break down. Okay, waited for some few minutes, then you had this bigger candle breaking out. Then you said it is time for you to sell. Okay, you put your stop loss where? Here. Okay, you put your stop loss here. But you see how this trade did not play out. Yes, we had a very bigger break of structure, but you continue keeping yourself into the trade. Actually, we sometimes say it's better for you to take the losses and run because they don't affect actually your account that much. But if you leave the losses in, you are here, okay, you had a break of structure which happened, you said, waited for the next candle which closed here, okay, you said now it is time for me to enter the market right below here. It turned against you, okay, the market turned, you had some drawdown. Once you saw the market closing up, you are out, okay, because you didn't want actually to go through, or you had your stop loss here, right? The stop loss was right here. Once your stop loss was right here, you are so much eager to see where the price will go. Then you made some losses, stayed with the losses for like from 16, is it from 16? From 17th, you said, man, I will just stay in the market until 27th. You are just in the market, stay for a whole week. You are stopped out a very big loss instead of you just taking a loss and moving in and seeing the next move that will happen. So I was actually teaching you some break of structure. The market will always break the structure with a bigger candle. You can see that the market broke out with a bigger candle. Your stop loss was here. Stop loss was here. Your target was where? Your target was here. Let us see that risk to reward ratio. If the risk to reward ratio is good, it's a good trade for us to take. If the risk to reward ratio is not good, it is not sweet for us to take that particular trade. So you enter the market here. Sorry, not there. Enter the market once this candle closed, not a short. You enter the market once it's closed. Your take profit will be here on this particular high. Let us see where the take profit will be on this particular high right here. Risk to reward ratio 1:2. I will stay in that trade all day long. I will stay in that trade all day long. Stay in that trade all day long. Sorry, stop loss was here. Stop loss was here. The reward was there. No, it is not a good trade. I won't take this trade because my risk is too way bigger than my profit. I can't chase fewer profits, retain actually my bigger losses. No, I won't take this trade. I won't take that particular trade. That is not a good trade for me. I'm not taking it. I'm not taking it. I'm not taking that trade anywhere soon. I will wait and see what happens. Another break of structure was here. So my take profit right here. Let us see that trade. If it was a good trade, let us observe and see if that trade was actually a good trade, long position. Enter the market once it closed up there. The stop loss was actually down here. Okay, your stop loss was there. The TP1 was actually here. Risk to reward 1:1, a good trade. I'm in all day long. I'm in. Let my profit, I'm out. You see how the market breaks the structure? We wait for the market actually to close with a bigger, either red candle. If it closes with a bigger percentage, you enter. Make your profit. If it is a good trade, it is a fake out, will be stopped out. It is not actually what you do. You look for risk to reward. If your risk to reward is much bigger, and you don't take the trade. If your risk to reward is good, take the trade. So that is all about break of structure. The market has broken the structure with a bigger candle. It closed. The next candle opened. You made some profits. You're out. You stop loss here. You take profit one. Boom. Made some profit. You're out. Break of structure. The market broke the structure. It closed below that particular structure. The next candle I'm in. The next candle I'm in. The next candle I'm in. So that is all about break of structure. Break of structure is where your support level is broken with a bigger candle, then the bigger candle closes above, you trade the position. When the market breaks below with a bigger candle, the bigger candle closes below, my bigger candle closes below, you're in with a bigger percentage, make your profit. Okay, right here. It's a good structure that has been broken. Oh, sorry, it's a good. It's a good structure that you can practice all along from. A bigger candle closed below, you're in, made some profit, out. A bigger candle closed, you're in, make some profit, out. A bigger candle closed below, you're faked out, out. That's all about break of structure. Thank you so much, guys.